joggers, everybody! That ain't no joggers! Welcome back, Strongman Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. A lot cheaper than this freaking loser's course. And a hater of the manipulative, disgusting, degenerate thief known as Jeremy LaFoo-Foo, also known as Jeremy LaFave. Hope I pronounced that right. Or financial education, or financial education 2, or financial education 3. You gotta have 3 YouTube channels, bro. I don't know, there's probably some grift involved in that too. Anyway, today I woke up, had some coffee. We ran out of creamer, so I had black coffee, and I'm pissed. That's besides the point. And of course, I turn on my YouTube on my big old TV that I bought with stonks, and I see this video by none other than Financial Education. One of the most disgusting grifters there is on YouTube, who charges up to, or at least he used to, $20,000 to get access to his private coaching to teach you how to buy garbage stocks. So here he is, putting out this video on January 16th, I guess this morning it came out, where he says, stock market investors are about to make the worst financial decision of their, of their life. So, let's see what LaFoo-Foo has to say. Now, all his videos are designed to convince you to buy unprofitable, highly speculative stocks like Tattoo Truckers Taint, Honest, Smile Dick Club, Planet 13, and PLTR. Now he's talking about PLTR because it dipped. So here in this video, what he's trying to teach you, and we'll watch a little bit of it, is that if you truly believe in a stock and it has a bright future and it sells off, you should just keep buying the dip, which I do agree with in principle. If a stock does have a bright future, you could buy the dip. Just keep buying it as it crashes and crashes, especially if it's trading below its intrinsic value. However, it's a little manipulative here because he talks about Amazon stock and how if you just bought the dip after the .com bubble, you would have made out like a king. Well, the only issue is, Jeremy, you could have waited till Amazon was profitable, aka they made money, and then you could have bought Amazon, and you still would have made a freaking fortune. But if you had bought Amazon during the hype phase of the .com bubble when it was unprofitable, you would have got your cheeks clapped. I mean, you still would have made money long run, but it's better to just wait till the company actually makes freaking money instead of buying a bunch of unprofitable trash. So let's see what he has to say about, oh my god, the biggest financial decision of my life!
Come down or come way up, depending upon if you're way underpriced or way overpriced. So you buy in, let's say you buy a 4,000 NASDAQ. Well, you could have went down to 2,000 and sold it all, or 3,000 and been like, screw this is a scam. Stock market's a scam. This is the worst thing in the world. Oh my gosh, I lost money, right? And just been like, I'm done with the stock market. Or what you could have done is, let's say you bought literally at peak, right around 4,000 or so, right? When it drops to 3,500, you could have bought. When it drops to 3,000, you could have bought. When it drops to 2,500, you could have bought. When it drops to 2K, you could have bought. When it dropped to 1,500, you could have bought. When it dropped to 1,100, you could have bought, right? And you could have bought as it went back up to 1,500 and 2,000. You could have kept buying it over, a course of several years. And the fact is, if you had done that strategy, you made out like a bandit, and that's even with starting with buying at the worst prices possible.
Yeah, that works with broadly diversified indexes if you truly believe the world's stock market will be much higher 20, 30, 40, 50 years from now, which is highly probable with, increased productivity, companies becoming more profitable, growth of the economy. Sure, indexes probably will be higher in 20, 30, 40, 50 years. And there's nothing wrong with buying the dip. However, it's not the same thing for stocks, individual stocks, because some stocks can go to zero. The index will not go to zero unless the freaking world ends. But stocks can and do go to freaking zero because individual companies can go bankrupt. And that's where he's trying to confuse you. Well, if you just bought the dip, woo! And he's doing this because all his stocks have been annihilated. And he's freaking terrified because his business model is all about hype stocks and 10Xing. And if people aren't 10xing, if they're losing money, they're not going to sign up for his garbage freaking Discord or whatever he freaking does, okay? So here he is teaching you to buy the dip, but he's using an index. Now, let's go and see what he has to say about Amazon. And then I'm going to show you how full of crap this freaking loser is. Amazon!
About it in terms of an actual stock. So we look at something like Amazon stock, which Amazon's obviously a beast of a company, but it always wasn't respected the way it is respected today, right? Where it's like $1 trillion plus market cap and everybody respects it. But it always had this, it was always giving you the signs of this is a game-changing company that's going to be huge over the next coming decades, right? So in Amazon, if you had bought it even at its peak of the tech bubble, which is crazy to think about, you would have went down about 90%. If you had bought it at literally the exact peak, all the way down to the trough, you would have been down about 90%. But what if you had been buying?
Is your portfolio not taking off? Maybe there are some duds keeping it down.
As it was dipping the whole way, right? And that was in, once again, the most bullish market we've ever had in modern history. Actually, not in modern history, in all history of the stock market, right? And you could have been buying all the way as it went down, all the way as it came back up, all the way throughout all these years, right? I was counting them. And what I found is I literally just stopped counting because I was already at 20 plus drops over it.
That's the highest you can count. Loser!
Amazon stock price's history, there's been 20 plus drops of 20% plus downward moves. Every single time the stock dropped 20%, 30%, 40%, peaked.
Kind of like your stocks.
To trough. You know, you could have ran out of the stock and been like, oh, this Amazon company, they suck. They're horrible. Look at, I'm down 33% on this stock. I bought it at this price. Now I'm down to this price. Instead, you could have been looking at the business model and realized, oh, this is a great business model. They got a huge future going in front of them over the next 5-10 years. They got all this stuff going. Here's where the trends are for this industry.
Sure, LaFufu, if you had kept buying Amazon stock, you would have been just fine. However, you didn't know if Amazon was going to survive around the dot-com bubble era, because they weren't making money. They were unprofitable. However, once they started becoming profitable in about 2003, then you could have bought, and it would have been way cheaper than it was at the start of the dot-com bubble, and you still would have been fine. But you want to at least see if the company can prove itself to be profitable. And then at that point, you can buy the stock. Now, let's go look at Amazon. Okay. So I have this ROIC.ai website, and it goes back like 30 years of financial statements. So you look, we have Amazon here. In the late 90s, they were, where's the net income? They were unprofitable. They had negative 36%, negative 18, negative 20, negative 43, negative 51. Right during the hype phase of the dot-com bubble, when he says, oh, it's okay to buy it, they were losing money like freaking crazy. But we can't tell if they were actually going to survive. They were losing a ton of freaking money in the 2000s, in the late 90s and 2000, early 2000. Holy freaking crap. However, if you were tempted to buy the stock, you could have been patient and waited till 2003 when the stock the company finally became profitable. They had a 0.67% profit margin, okay? And then 2004, 8.5, 2005, 4.23. Then you could have bought the stock. And if you go back and look at the chart, let's say 2004. 2004, the stock was $40, $40, $50, $40, okay? You go back to the dot-com bubble when it was unprofitable. Oh, $76, $86. It's almost like if you listen to Jeremy, you would have been buying Amazon at this point. And you would have done good. However, back then, you didn't know if the company was going to survive. Just like a lot of his freaking companies that he's telling you to buy now. So don't think, just because you've lost a lot of money in all his hype stocks, that this is going to happen to them, because you don't know if they're going to freaking make it, okay? Amazon did, and you could have waited until they became profitable. What? No! And you would have made more money, by the way. So, wait till a company becomes profitable. Amazon, look at this, 2004, profitable, 2003, profitable, and you still would have made a lot of money. You don't have to buy stocks when they're unprofitable. But these are the stocks that he's freaking shilling on you, okay? Honest! Negative 6% profit margin. You can't possibly wait till it makes money and then consider buying it. Tattooed Trucker's Taint Sack, negative 13%. You can't wait till that becomes profitable, can you? You'll miss all the gains, just like Amazon, right? Smile Direct Club, negative 20%. Wow. Can't wait till it's profitable. Planet 13. Dude. Let's see what the profit was. Negative 25%. And of course, Palandoc, negative 26%. Wow. Do you see my point here? Do you freaking get it? You can wait till a company becomes profitable. It makes money. Positive cash flows. Present value, future cash flows, stock price. You can wait till it becomes profitable. You don't have to buy these freaking trash stocks right now. You can be patient and wait. Maybe Honest will be a 10x company. It's entirely freaking possible. I'm not disagreeing with that. Any of these companies could be 10x companies. Tattoo Truckers Taint, Smile, I don't know about Smile Direct Club, Planet 13, and even Palantir. All these companies could be massive freaking winners. But you can wait. Don't buy these stocks right now when this freaking loser tells you to. Maybe? But of course, he's a freaking moron, so he has 100,000 subscribers. That's how it works. Anyway, I hope you saw the lesson with Amazon. Okay, you can wait until a company becomes profitable. Then you can do your due diligence. You can project cash flows, revenue growth, blah, 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 blah. And then you can make a decision to buy. You don't have to buy a stock when it's losing freaking money like mad. That's all this idiot does, is just buy money-losing stocks and just praise that they somehow survive when they potentially could not survive or cannot survive. They can freaking go out of business. It's entirely possible. And then you lose all your freaking money. And I hope Tattooed Chef goes bankrupt. I want to see him lose $1 million plus freaking dollars just so I can laugh when you could have just waited till it was profitable. Anyway, that's it. Like, subscribe. Don't pay this idiot a dime of your money. You can watch him for entertainment purposes, but don't take him seriously. And y'all have a wonderful, delicious Sunday. Cheers!